what conviction, first of all, do you have in making calls on the U.S. economy, on the U.S. labor market, on inflation?
Hey, well, thanks for having me again. You know, it's tough to make sense of what's going on in the economy right now because the access to data is so limited. We're looking at private data sources and trying to infer what the BLS would have said over the past several weeks, and that's difficult. That's not to say it's brand new, right? Myself and the Fed and economists across the country have been looking at private data sources in addition to federal data sources for some time. We're just having to put more weight on them now than we would have. I do think that
Elizabeth, I just want to jump in. What private data sources are the ones to you that are most important? What do you think tells the fullest story?
Yeah, well, I think when it comes to the labor market, there's several great private data sources. So the ADP is a reliable data source, but all of these private data sources have unique caveats. They're measuring slightly different things, and you need to take that into consideration. So ADP misses government jobs entirely. They're more likely to overstate the number of jobs being added to the economy right now because they're not catching federal jobs, for example, which we know is a big item this year entirely in 2025. Then you have a source like Revelio Labs. They're another solid source of labor market data, but they're searching job profiles, professional profiles. So there may be a delay in their data because they're catching, if you're open to work on LinkedIn, for example, putting all of these together takes a little more work than just looking at the jobs report every month. But I think that's what we have to do in the current environment.
All right. So labor market, just quickly, how do you see it?
Solid, but gradually cooling, which is, I think, in alignment with what Fed Chair Powell said just a couple weeks ago. You know, there is some weakness. Hiring is slow, but the unemployment rate, according to the Cleveland or the Chicago Fed nowcast, remains in that 4.5% range. So not alarming. We are hearing a lot about layoffs in the headlines, but the headlines and what happens in practice or what would have been reflected in the BLS data are two different things.
All right. Inflation. So I want to just point out in an interview with Market Watch published today, Cleveland Fed President Beth Hammack said she's worried market participants might doubt the Fed's commitment to its 2% inflation target if the central bank continues to lower rates. 2%, that target, and then where we are in terms of U.S. inflation, how sticky it is as we get kind of closer to 2%, but not quite there.
Well, I think we can still confidently say that inflation is high. It's above target, but it's not accelerating rapidly. So another source I look to for this one is the Cleveland Fed nowcast. They compiled data from commodity prices and other high frequency sources to estimate where the CPI would be. And it says that, you know, just that inflation is steadily high, but not accelerating. Right now, I think expectations are in alignment. Whether you're asking the Fed or asking consumers, up in the short term is what people anticipate, right? Yeah. Inflation is going to remain above that target, but then come down in the long term.
Can I just ask you, I understand that prices are not going up like they were a year and a half, 2 years ago. I get that. But they're also not going down. And I mean, the reality of kind of what we're all paying for things, is this just it? And that's just the way it is? And why does it feel like we are still paying a lot for stuff? And is that a new reality that things are just costing more in today's society?
Well, I think there's several reasons for that. Right now, this year, there are several sources of inflationary pressure, and we're seeing that, or we have seen that up until this point in the inflation data. You know, the impact of tariffs has kind of been trickling in, but also demand for services has kept services inflation high. I think also it's because we're all hyper attuned to it. You know, there's research out there that says after a period of high inflation, we're all going to be extra sensitive to inflation. And I think that also plays a role. We all have our eyes out for it, right? So because inflation is higher than we like, it's going to be particularly painful in light of the recent high inflation period.
Elizabeth, I had an interesting conversation with somebody today about the Federal Reserve and just the idea of Fed independence. And I'm curious about your view on this. Her argument to me was, we're starting to look at monetary policy in the United States that represents not necessarily monetary policy historically in the US, but one that's under more political pressure than we've seen, at least in recent years. And to her, it's starting to look like something more out of the developing world where monetary policy is more politically influenced. I'm wondering your view on that.
I don't know if I would take that quite of a bleak look. I mean, I believe the risk is there. I think it was just earlier this week where Bostic came out and said he plans on retiring next year, which opens up another seat on the Fed. And the risk is always there that as an administration has undue influence on who takes a seat at those decision-making tables, there could be more pressure than usual. I do have pretty deep faith in the independence of the Fed and sort of the dedication to independent monetary policy that these people have in these positions. But I do think we have higher risks now than we did, say, a couple years ago.
Yeah, I mean, part of, I think, confusion on maybe the part of investors when they're thinking about the data that's going to come and whether or not it provides conviction for another rate cut come December. The part of it is, I mean, Fed officials themselves are divided, right, on the best path ahead for interest rates due to high inflation and continued weakness in the labor market. So it's a dual mandate. That's tough when both parts of the mandate are tricky right now, right? And maybe create some problems or would determine a different Fed policy for each. And you do wonder that debate and which voices are going to sound the loudest and perhaps have more sway, assuming Fed Chair Jay Powell is among them. But how we need to think about that in the next Fed decision.
Yeah, you're absolutely right. So not only is the data pointing to the dual mandate, sort of the two sides of the dual mandate being at odds, right? We still have high inflation and the labor market is cooling, but neither one of those things are sort of at a tipping point, right? We're not seeing a skyrocketing unemployment rate, and inflation is not at target, but it's not alarmingly high. So it makes sense that there's sort of more gray area and people are going to fall on either side of these decisions a little bit more than they normally would.